What happened with the Japanese markets? Give me 60 seconds and I'll explain it. The Japanese index, aka the Nikkei, dropped 12% overnight. That's the worst day since Black Monday in 1987. To put it in numerical terms, that means it dropped more than 4,000 points in one day. The reason is because the Bank of Japan raised interest rates. Why do you care? Because many hedge funds and institutional investors were taking part in what's called a carry trade. A carry trade is when an investor borrows money at a low interest rate, for example the yen, and then invests it in another currency with a higher interest rate, let's say for example the US dollar. It's an easy way to make money, and Japanese companies love this because that means US investors with their higher currency can buy more of their products more readily and more easily. But when the Bank of Japan raised interest rates, this caused a problem. You see, investors started getting margin calls from their brokers saying that you need to pay up. Investors were no longer able to borrow these interest rates anymore because the Bank of Japan raised those interest rates. And these Japanese companies are looking around saying if that money is more expensive, people are not going to buy our product. Add that to the fact that there's a recent downturn in the US markets, which can have a very significant impact for carry investor traders. That means that if you're looking at the tech sector and they're getting killed, and you're looking at Bitcoin and they're getting killed, and you're looking across and everybody's getting killed at the same time, is because of the ramifications that happen in Japan are now starting to have an effect in the US market. And people think that the US market is overvalued and hope that the Federal Reserve should have raised interest rates already. Whew. There you go.